Hi everyone, welcome back to Be Rich. We have Shashwath again joining us from college, and he's got another interesting article continuing further on this Blackstone celebration.
Saga.
They seems saga and celebration they seem to be doing. There seems to be a lot of PR money being spent in Blackstone, pumping the company up. I don't know for what reason, but anyways, I'm sure we're going to find out more about this as the days and months roll on. They're almost in the cusp of hitting $1 trillion in managed funds, so a lot of guys clapping and celebrating that. Meanwhile, the remnants of the fiasco which happened a few months back is still lingering there in their minds. So there's an interesting article which Shashwat bought, and I thought he can explain about the article, and then we can discuss further about it. So tell me, Shashwat, what was this article about?
Yeah. So the Blackstone company is something which manages funds, and the funds which they do manage, they invest in real estate and they invest it into private equity. So these are their size. These are the two biggest chunks of their portfolio. But that they're not purely limited to these. They also have some money in debt, and this is corporate debt and your government debt. So when it comes to Blackstone, they offered about 12% year on year or something to that effect during the zero interest rate regime in the US. So they already had a lot of funds being piled up because they were a nice alternative to the zero interest rate asset, which is the treasuries. Treasuries weren't giving you much. So people were piling on cash into Blackstone to get some sort of positive return. So things changed as soon as the Federal Reserve started hiking rates, because as soon as your interest rates hike, your property values take a dip, take a big hit, and it dips. And because of this, Blackstone's real estate investment trust, it's a real estate investment trust. So its portfolio mainly consists of properties. And although Blackstone claims that they have high quality properties which they acquired at the right prices, which means that there wouldn't be much of a hit, even regardless of this, Blackstone still saw a lot of withdrawals. And the thing is, they were caught off guard, and it was a big shock to them. And in order to prevent a stampede liquidity, in the sense that people were running to take their money out, which would mean that prices would crash like tremendously, which it did happen. Blackstone's stock price went down by 20%. Uh, because of this withdrawal, because of these withdrawals and the information which is floating around. So they had to pay out $8 billion in assets, which at the time totaled about 10% of their assets under management in that particular division. And so what ended up happening was that Blackstone pretty much were under fire. Their publicity team wasn't doing much back then. And they saw their stock price go down by 20%, as I had mentioned before. And this spelled very troubling times for Blackstone. But that being said, very recently, again, they've seen a lot of investors pile in funds into Blackstone to leverage higher yields on, first of all, your debt instruments. Secondly, your properties, which they wanted to get in on real estate investment trusts. So Blackstone has seen a sort of vindication, if you will, in the most recent months, and they're reeling in after the publicity stunt which they did with Schwartzman and Jonathan Gray, who's the successor of Schwartzman. So both of them have been working around the clock in order to revamp the image of Blackstone by saying, no, no, you guys haven't really understood our business model. We actually invest in high quality assets which don't particularly aren't particularly very tied to the interest rate cycle. So their stock price saw a resurgence as well, which and they're hoping to get listed into the S&P 500 if Activision Blizzard gets purchased by Microsoft, and that goes through. They're hoping to get linked into the S&P 500, and yeah, things are looking sort of better for Blackstone, and there's a lot of publicity which is going around. So that's what the article basically talks about.
Yeah, this is typical of market reaction to news and shooting from the hip rather than finding out what is happening and reacting to it. Yes, right at the time when the liquidation was happening in those assets, the banks were failing around the same time. So people
Yeah,
thought this was a domino effect happening. and Blackstone's going to be wiped out. They're not going to have the liquidity to make these payments. They're going to get jammed up and start liquidating their crown jewel and their family assets to pay out,
Yes.
make the payouts. Fortunately, the management of Blackstone managed to steer the ship safely, and gives you an idea on the opacity of these companies. From being an investor from outside, no matter we look at the balance sheets, we look at their financials, we really don't have a clue what is happening internally unless you're cued in and you have some inside information. So the kind of liquidity they hold on to and how they're able to move funds around, because 8 billion is a lot of money. It's not pocket change. It's like
Yes.
almost 1/10 of Berkshire's cash holdings. So it's like Warren taking 10% of his cash and throwing it out. So it's
Yeah.
quite a lot of money. But they managed to do this well, and their PR engine was taking a break at that time. Now it's gone
Yes.
on to overdrive and trying to pump up the company, because I'm sure they'll, like Shashwat said, they see the listing into the S&P in the horizon. They see some good opportunities. So they want to lay the groundwork. Their PR
Yeah.
team is busy working the grounds, and the media, you know, hobnobbing with the media to make sure some flattering articles are written about them, and
Yeah.
project them in a very nice light, and how they managed to pull through and get through it. And not only that, they bounced back with resilience, and they're now at 1 trillion managed funds in
Yeah.
certain businesses of theirs. So they're trying to project themselves, things are great. Again,
And
this is
uh,
the exact opposite extreme of what happened a few months back, when they
yeah.
were everyone panicked saying they're going to disappear. Now it's going to the other extreme of exuberance, saying Blackstone will weather any storm. It'll be here for 1,000 years. They're going to be the pinnacle of U.S. financial and investments. Blackstone's going to be the company to
Yes.
invest in. So it's going from one extreme to another extreme in a short span of time. It's like a whiplash.
Yeah.
So as an investor, it tells you to be cautious, especially with
Yeah.
companies like Blackstone. So what's your
And
input, Shashwat?
no, and I mean you're right. And then there's another factor why the suddenly all of a sudden they've started doing PR, and Schwartzman, who first never used to even rear his head out of the office and give interviews, he was very sparing with it. So like you said, Blackstone was like a black box in the sense that you didn't know what the hell was going on inside. But now that a lot, so there used to be an elite firm where private financiers and private individuals, very wealthy individuals who Schwartzman used to handle separately. They didn't have to. Schwartzman didn't need to make public statements because the public had nothing to do with it. But as of late, because of all the free money that's been floating around, a lot of the public retail investors like us have gotten involved into Blackstone, and a predominant chunk of their assets under management, which is now taking them to $1 trillion, comes from retail investors like us. So Schwartzman now has his tail behind his legs, in between his legs, because he's realized that just taking care of your elite private individuals, private financials isn't going to cut it anymore, because if you don't
True,
make these public rounds in terms of PR, and if you don't make the rounds on CNBC, and you don't make the rounds on FT and all these other newspapers, you're not going to be able to command the trust which you'd want when you have such a
true,
large group of investors who are taking you to that 1 trillion mark. Okay, great. Your private financiers took you to the 100 billion mark, the 500 billion mark. But to get to that 1 trillion mark and then so on and so forth, you do need retail investors. And when you do capture the retail investing market, you need to get on to the platforms which they consume. And if you don't, you end up having this sort of PR a lackluster PR this thing effort, and you don't command the trust which you really do want to command, especially when you have lofty goals like getting listed on the S&P 500 and competing with companies like Goldman Sachs.
true. And this is a lesson they learned from this whole fiasco of 8 months ago, was that till then they thought they're untouchable. So whatever happens, people write about us, our investors know what we are, and they trust us, and nothing's going to happen. Suddenly they were caught off guard, and they realized, like you rightly said, because from infancy, Blackstone, nobody really
Yeah.
knew what they were doing, where they were investing, where they were getting their funds from, the kind of investments they were making. Nobody really knew. It took a long period of time as they were growing and growing. They had aspirations of becoming the next Goldman Sachs. That's when they
yeah,
opened up to the public and they allowed public to enter their, you know, products. And when that happened, like you rightly said, then you realize they need to be, it's a two-way street. The trust they need to build with the public, they need to communicate as much as they're taking funds in,
yeah,
which has been a big learning for them. And this is true for all these companies in India. I mean, one of the main problems Reliance has is this. Reliance has got this huge shadow of bad PR because they grew up, these two boys, under their father, and they took over the company, and they were always like, hey, you should trust us, just
yeah,
basically because we're Ambanis.
yeah,
My father worked as a petrol bunk pump man, and from there he built this, so we can do anything. Just trust us. You know,
yeah,
don't question whatever decisions we make. We know what
yeah,
we're doing, and public doesn't swallow it all the time.
yeah,
Sometimes things can go wrong, and you have to, like you rightly said, crawl back to the public and say, "Hey, I'm sorry. I made
yeah.
a mistake." Like Anand
And
Ambani's whole empire is vanishing.
yeah. No, and the Zerodha guy, Nikhil Kamath, has tried to, use this. I don't know how much I believe in Zerodha, but he's definitely tried to have positive PR around surrounding him. And yes, he goofed up with Vishwanathan Anand when he had a chess game and he cheated with Vishwanathan Anand, and he
True.
immediately pedaled back and put out and issued a statement and immediate. So although he wasn't very smart then, but what he did understand very well to the core was you need to have good publicity, and it doesn't matter where you're getting your funds from. Your reputation, like Warren Buffett says, it takes you a long time to build, and it takes you only about 2 seconds for you to just go away, do away with all of it. So that's something which everyone
I
learns the
agree.
hard way.
I agree, and I wish our so-called celebrities in India would realize that they do deal out their fame and their popularity, and they quickly want to cash in, like Shah Rukh Khan and all that. This whole Byju's episode proves that beyond a shadow of a doubt, that you should not
Yes.
be believing Shah Rukh Khan endorsing any goddamn product because the guy is
Yeah.
clueless. Other than doing flapping his arms around and walking around and smiling and having a smoke and showing his rip abs, the dude has now no sense of what he's talking about when he's
No,
supporting a company.
and it's not just Shah Rukh Khan. Like even your other Bollywood celebrities, they
Absolutely right.
promoted random crypto apps which were coming, and now they're folded. We don't even hear the names of these crypto ads, and they
All
had
over
ads
Hollywood too.
running. Yeah, and they were running
True.
ads left, right, and center, and they were telling you. And there was even an ad where I think this guy named Ayushman Kurana or whatever his name is. He said crypto safe hair or something like that, and I was just
Correct.
my mind was blown. I was like, what? Seriously? You
I
signed
don't
up for
know.
this?
No, it's like a script given to him, like a movie script, and he just reads it. He's like, "Okay, you're going to pay me 10 crores for this? Okay, done. Here I go.
Yeah,
Okay, where's my money?" All these guys should have got paid in crypto. That would have been fun.
yeah,
If
yes. Then
all
you
of
have
them
skin in the
had such
game.
faith, yeah, like Kim Kardashian and all of them, but they wanted dollars. They said, "You can keep the crypto, just give me the dollars."
Yeah,
This Steve Curry, you name them, they all did it. So
yeah,
that's what the thing is, and the public, sadly, they fall for this.
yes,
Because advertisers exploit this. Human behavior psychologists who are working with these companies, they exploit this. We tend to believe this. We tend to believe, like Rajnikant, the next Jailer movie is coming out. God knows what all products he's going to be endorsing in the movie and doing. You know, it took him a long time to own up to the fact that he should not be smoking. You know,
yes,
his whole brand was throwing that cigarette in his mouth, and he
yeah,
peddled it for such a long time, and then finally had no choice but to say he shouldn't be smoking because everyone was telling him, like, dude, young children and young boys, and they're all looking at you and they're copying you. He was like,
yeah.
that's not my problem. They should know better. I'm just an actor. He always, his standard excuse for everything was, I'm just an actor. Don't
At
blame
least
me.
with him, he wasn't getting paid by cigarette companies to do it. ITC wasn't paying him. But with this, these guys are actually
Today,
getting paid.
but if it happens today, I'm sure ITC would be writing the checks out to him. but but that's the world we live in. That's as an investor, our advice would be please do your due diligence.
Yes.
Don't react just because the markets are moving one way or another. Yes, when
Yeah.
price corrects like 20% corrects, and if you've done your due diligence, it's a buying opportunity. If you've taken the
Definitely.
time to do the studying, like how ITC fell when huge amounts of shares were being liquidated by an investor, the share price fell. it was still a good company. It was a good buy. If you've done your due diligence, you won't worry about it. Same way you see Adani falling. If you're not done your due diligence, just because the share is falling, you can't buy it
Yes.
because you know it's a bad buy. But if you're not done a due diligence, you'll be like, hey, just like ITC fell, now it's gone up by 4 times. It'll fall and Adani will go to 10,000 in no time. Hey,
Yeah.
doesn't happen. Look at all the Anand and Ambani's companies. Look at Kingfisher. There's so many examples,
And
and
Peter
that's
Lynch talked about this in one video, like one this thing speech, and it's on YouTube. He says people always come and ask him, and they're like, "How low can it go? It's already fallen to like 10 cents. It's already fallen to 5 cents." And Peter Lynch says, "What if it falls to 1 cent? What if the company doesn't exist tomorrow? What the hell are you going to do then?" So it's really a question of that.
yeah, and that's the problem with attraction with penny stocks, you know. So people just like, okay, these are I've located these 20 companies and their share price is right now 2 rupees or 1 rupee. I just have to
Yeah,
put 10,000, 10,000, 10,000. If one of them goes, you know, makes goes to run for it and it goes to 40 rupees, I've recovered all my money plus I make like a bumper profit. Doesn't work like
yeah,
that. You know,
it
you can
doesn't.
put it in 20 buckets and you can lose all of it.
Yeah,
You know, and the thing is, the human hubris is also there. When you see it go to that 40 rupees, you won't push the
you
trigger and sell it. You'll be like, hey,
no,
it's gone
yeah,
40 rupees. Maybe it'll go to 50. Who knows? Maybe there's a
yeah.
chance of an 80. You know, you're
No,
not looking at the company shares and
uh,
you're not looking at the value of the company anymore. You're
that's
looking at
there.
like the weather.
And even once you sell it, people attribute the skill to themselves. They say that, oh, this has
Correct.
happened
Very
because
true.
of my skill. But then
Yeah.
what you have to realize is there's something called fool by randomness, again, which Taleb talks about, which is that,
Yeah.
yes, something might go your way, but that's not because of your skill, it's just luck. And
Correct.
there's no room for hubris, there's no room for poor research. The When you get into this market, it's a tough place. It's a place where it's going to throw you around, and investing is not something which is smooth sailing if you're doing individual stocks. So you really need to put in the work. You can't look at PR
No, you
stunts,
can't.
and
No.
you can't rely on faulty logic like it's 2 rupees, how low can it go? These are things which are
That's one of
big
the main
no-nos.
reasons. That's one of the main reasons we don't recommend companies and shares and anything like that because you should do your work. We can't do it for you. It's like I can't, Shashwat can't lose the weight for me. I have to do my work. He can talk to me, he can encourage me and share information saying, you know, all this, you should do this, you should read this literature and you should follow these protocols. But at the end of the day, I have to do the work. Same thing as an investor. If I want to be rich, I have to do the due diligence of studying about these companies, looking into the history of these companies. Just not, people think I just have to read the balance sheet, you know, it's just one small portion, the balance sheet. The financials is just one portion. You have to read the history of the company. You have to see
Yes.
where it came from. Who are these guys who are running these companies? What are they doing? You know, people don't do that, which is what the sad part is. They all like go on saying, tell us how to calculate intrinsic value, how to look at the balance sheet. Yeah, but that's just one facet. You know, just the maths is just one thing. Just with the maths, you can't do it. You need to do the rest of it.
And there's a lot of logic which goes into just trying to figure, which is non-numerical, which is non-quantifiable. You need to figure out whether the business even makes sense, whether you think the
Yeah,
business is going to survive for the next 5, 10 years. First, you have to figure that out. Then you look at the numbers and see, okay, do the numbers make sense? But before you even
correct.
realize whether the business is conducive for you for the next 10 years to invest in, you can't, yes, the numbers might look good now because that formula worked 10 years ago, but that formula may
Correct.
not work 10 years forward. So that's something which you need to look at.
Right. Blackstone, that's why you need to look at their property investment. They're doing a PR jig, so they keep saying they did very sound investments, their properties are fantastic. But we all know the way the property cycles work, where AI is influencing. If you look at all these things in the horizon, you have to take a call as an investor. Are properties worthwhile being invested in? Is it a
Yes.
basket I need to be in? And where do these properties that Blackstone holds, where are they actually sitting? What are
Yes.
these? What are the yield? What are they getting out of these properties? What are they doing with that investment? You have to really take a deep dive into it. Then say, okay, you know, this property basket of theirs is something lucrative and it's cheap right now and I should invest into. You
Correct.
just can't blindly say, okay, it's corrected 20%. Okay, let's
Let
jump
me
into
buy
it.
it. Yeah.
Yeah,
And
that's crazy.
yes, the stock rebounded, but that being said, if you didn't do the due diligence and you didn't look at whether the stock would have, it could have very easily been like Bear Stearns or Lehman Brothers, where it just went out like that. It's very
Yeah.
possible, unless you knew that they didn't have some leverage sitting there. And a lot of the time, even if you don't have leverage, because stampede liquidity works like that, in the sense that if there are 10 guys and 9 of them want to sell an asset, and you also own that asset and you don't want to sell, your asset is going to go from 100 to 10 rupees because there are 9 other guys willing to sell it at 10 rupees.
Very
So
true.
even then,
That's
you end up going bankrupt because these guys are trying to sell. So these are things which you have to keep in mind. And maybe not don't give as much attention to PR as you will. And definitely, as my uncle said, be meticulous in what you do. So yeah.
correct. And it always goes
And
back to those saying markets can be far more irrational than you can be solvent.
exactly. And the videos which we do on US stocks is just to give you guys an idea of how we think about it. And it's in no way comprehensive in terms of whether to invest in it or not. It's just an uncle and his nephew faffing around for a bit, thinking about numbers and thinking about business ideas, and having a good time. So yeah,
Yeah.
that's about it.
And just to give you an insight on how what we talk about when we're not on the camera and how we talk about putting our money where we decide to put our money. And this is how we talk. And we talk and talk and talk like this for hours and days before we decide to put any money anywhere. And of
Yeah,
course, Anand has to sign off on everything which we decide to do to. So that way we do have a guardian angel to look out for us. Anyway,
yeah.
that being
Yeah.
said, yeah. Anything you want to add more, Shashwat?
But no, and I was just going to say that yes, sometimes we do agree on ideas, but then it gets completely shot down by my other
Yeah.
uncle as soon as he
Oh,
hears
you'll
it.
be
So
surprised how many times it gets shot down.
yeah,
Which
so
is okay. I mean, it's like there are enough companies and enough opportunities, enough arbitrages in the world for everybody to make a small profit. You
absolutely,
just that,
absolutely.
yeah, you don't have to look at it and get emotional about it and say, oh no, I missed this opportunity, I missed this chance. Don't worry, another one will come. Anyway, that being said, thank you for joining us on Be Rich today. I hope you enjoyed this video with me and Shashwat. If you did find it informative and entertaining, please do subscribe to our channel and turn on the bell notification icon, and do share with your friends and relatives who might enjoy this kind of content. Again, we'd like to thank you for joining us today on Be Rich.
Thank you.
I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.